Welcome back to the deep dive. The landscape, global markets, crypto, tech, it's always moving, isn't it? Prices shift, new stuff happens daily. Today, we're diving into all that, but through a specific lens, the source material you shared with us. It captures a really interesting snapshot from late last week and the weekend. It's a mix of, geopolitical moves, fresh market data, and some, pretty massive tech initiatives.
That's right. The sources really cover a lot of ground. Everything from, say, the immediate market ripples after political announcements, right down to specific data points on crypto volumes, how decentralized apps are actually being used, and even these huge AI infrastructure projects going on in places like the Middle East. Our goal here is basically to walk through this material, pull out what's most telling, and sort of connect the dots to help you see the bigger picture.
Exactly. Think of us as your guides. We'll point out the surprising bits, the crucial insights, and help you, cut through any noise to get to what really matters. Let's unpack this. So, jumping right in. The immediate market reactions described in the source material. We learned crypto prices initially took a bit of a dip. And the reason given, President Donald Trump's announced plan back on May 23rd. He was talking about a pretty hefty 50% tariff on EU goods and 25% on goods made abroad, like Apple and India, for example. This news, according to the source, it shook the global markets a bit and had that ripple effect on crypto.
Yeah, and what's interesting, as the material highlighted, is how fast the market reacted, and then how it seemed to start recovering just as quickly. The sources noted President Trump later announced a delay on that EU tariff decision, pushing it back, probably until July 15th. This was described as a temporary breather, which apparently allowed prices to start climbing again. It really shows how sensitive these markets are, doesn't it, to policy shifts. Very volatile.
Definitely. Now, the source material itself, it takes a really strong stance on tariffs. It actually called President Trump an absolute genius about them. The argument presented there is that, historically, putting tariffs in place actually helps reduce inflation. It mentions Bureau of Labor Statistics data and claims that in President Trump's second term, inflation reportedly went down for the first time in 4 years after tariffs were implemented, linking it directly.
Right, but then, on the other hand, the source also mentioned a completely contrasting view. It pointed to specialized analysts who apparently suggested these tariffs would have, significant negative economic impacts, things like consumer prices, international trade dynamics. But the source pushed back hard on that, argued these analysts were wrong about inflation increasing before and are now circulating incorrect and misleading information. So you get both sides presented right there in the material.
And the source tries to explain President Trump's thinking, or the perceived rationale anyway, using tariffs as like a negotiation tool and also to create a more equal playing field internationally. The argument goes the U.S. might charge 5–10%, while other countries could be hitting 80–90%. So, from this viewpoint, tariffs push companies to build in the U.S. to avoid those costs. The sources even gave examples like TSMC and NVIDIA setting up U.S. offices, suggesting this strategy might be influencing those kinds of decisions.
And the material made a specific claim, too, that President Trump has generated more than $10 trillion through these tariffs, arguing, that this directly benefits the U.S. economy and helps keep inflation down.
The sources also touched on a few other things about the U.S. economy under the Trump administration, mentioned passing a balanced bill, the idea the U.S. could be heading towards a golden era, and highlighted the Department of Government Efficiency, DOGE, which sounds interesting. They suggested it's aimed at cutting wasteful spending, kind of comparing it to Elon Musk's approach, and even pointed to Doge.gov for transparency.
Okay, so bringing this back around to our main focus, the source basically argued that because President Trump is seen as advocating for Bitcoin and crypto, these perceived positive U.S. economic trends should, logically, look good for crypto prices going forward. That was the connection they made.
That's a fascinating link they're drawing. How directly do you think these really high-level political things like sudden tariff talks or economic forecasts, how much do they actually filter down and, influence the daily crypto price swings and investor sentiment we see?
That's always the million-dollar question, isn't it? The sources did give us a snapshot of the numbers, sort of a pulse check from early May 26th, Dubai time, which was still Sunday in the U.S. Global market cap was reported around $3.49 trillion. That was up about 3.33% in the last 24 hours at that point. Total volume was also up significantly, $90.8 billion and 11.6% rise. So healthy short-term movement there.
Okay, so the overall market looked pretty active then. What about specific areas like, say, decentralized finance, DeFi?
Right, DeFi volume was listed at $16.87 billion. And the total value locked TVL in DeFi was quite substantial, $115.95 billion. The source noted DeFi volume made up about 11.01% of the total crypto market volume. They also specifically pulled out real-world asset RWA, tokenization TVL. That stood at $12.47 billion. And they mentioned deflama.com as a place to track those figures.
One thing that really jumped out from the material was the BlackRock IBIT Bitcoin ETF. It was described as like totally dominating the institutional space. It recorded a huge $877 million in daily inflows on May 23rd. The source called that the highest ever daily inflows for that specific ETF. Apparently, it now holds $45 billion in total assets and saw $5.2 billion in trading volumes that day, its second highest ever. The source even quoted Bloomberg analyst Eric Balchunas calling the surge a classic trading frenzy and suggesting he's the guy to follow for ETF news. That's serious institutional cash flowing in.
It really is. Significant numbers. Now, looking at decentralized exchanges, DEXs, the sources pointed out they accounted for about 46.03% of total volume. But, and this is an important but, they cautioned that a big chunk of that, maybe 20-30%, might actually be centralized exchange activity just being routed through DXs. Their perspective was you'd really need to see that 40-60% dominance coming purely from average individuals transacting and see that consistently for maybe 6 to 8 months before you can confidently say the world is really ready for widespread DX adoption.
That's a key distinction, right? Is it real users or just CXs using the plumbing? The top DX volumes from the source for that 24-hour period. PancakeSwap was way out of front, around $9.68 billion. The material suggested this high volume might be linked to activity on the Binance BNB chain. Then you had Uniswap, roughly $2.35 billion, Radium at about $754 million, Jupiter at $437 million, and then PancakeSwap showed up again at $425 million. So lots happening there. The sources clearly noted a lot of activity, specifically on PancakeSwap. Seems like that was a hotspot.
The sources also laid out an interesting theory, a method they use perhaps. Tracking stablecoin volume, especially on Tuesdays and Wednesdays, as a potential market indicator. The idea basically is that high stablecoin volume might mean money coming onto exchanges, potentially getting ready to buy crypto. So tracking stablecoin volume, then total crypto volume, and then watching if Bitcoin's price pumps soon after. They suggested this could signal a new all-time high might be coming. It's worth repeating, the sources explicitly added a not financial advice disclaimer right there.
Got it. A potential leading indicator to keep an eye on, but with caution. According to the material, the top stablecoins by volume. Tether, USDT, was way ahead, $63.24 billion volume, over 62% dominance. Circle, USDC, was next at $8.38 billion, and then FDUSD followed with $3.73 billion.
And finally, just rounding out the numbers they provided, Bitcoin price was around $107,631, down slightly, 1.28% in 24 hours, but still up a decent 3.73% over the 7 days prior. It had recently hit new all-time highs over 111K, even over 113K on some exchanges the previous weekend. Ethereum was about $259, also down a little in 24 hours, 1.26%, but showed stronger weekly growth, up 6.38%. XRP was around $2.30, showing declines over both periods. Bitcoin dominance was 61.7%, marginally down over 72 hours, while Ethereum dominance was 8.70%, and the source noted it had pumped up over that same 72-hour window.
Okay, so these numbers from the source, they paint this dynamic picture, right? You've got record ETF flows showing institutional strength, but also these nuances like the debate over real DX volume and shifts in dominance between Bitcoin and Ethereum. When you see this kind of data snapshot, what are the main takeaways or maybe questions that pop into your head about the market's health and direction right now?
Well, these metrics give us a pulse, definitely. But it's also really crucial to look at how the technology is actually being used and the challenges it's facing. The sources then shifted focus to dApp usage metrics, specifically looking at unique active wallet, or UAW, interactions. They cited stateofthedapps.com, which apparently has ties to Tim Draper as the source for this data.
Right, and UAW tracks wallet interactions with smart contracts, yeah. But the source also pointed out, crucially, this isn't necessarily unique people and worried about potential manipulation of these numbers.
Exactly. It's a metric, but one you have to look at carefully. According to the source's data, the top dApps by UAW were LOL with 3.61 million UAW, Skyweaver with 2 million, World Zipians at 1.22 million. And given those are gaming-related, high interaction numbers kind of make sense. Then there was Pump Fun with 671,000 UAW noted for high usage, and Aave Protocol with 659,000. The sources suggested checking stateofthedapps.com yourself, maybe sorting by usage, or even looking at dollar value involved in the future for a better picture.
Okay, so from usage to security. The sources also flagged some pretty significant bad news. An attack on the SUI ecosystem. Seal Protocol, described as one of SUI's biggest DXs, apparently got hit by a $223 million Oracle manipulation attack back on May 2nd.
Yeah, that sounds nasty.
Yeah.
The sources went into how it happened. The exploiters deployed some tokens specifically to mess with historical data from an oracle, which then let them basically drain the liquidity pools. Caused massive crashes for related meme tokens, LOI, Soothing, squirt down like 97%. And the main SUI token itself also took a double-digit percentage hit.
Wow. And the aftermath reported is, well, concerning. The attacker apparently still holds $164 million of SUI token and managed to bridge $65.5 million in USDC over to Ethereum. The protocol did react, paused contracts, fixed the bug, and proposed an on-chain vote to return frozen assets without a chain rollback.
But this incident, according to the sources, it really sparked a critical debate. Raised what they called a massive red flag regarding centralization on the SUI network. The main concern was the network's apparent ability to just freeze assets like that. The sources argued this highlights a potential downside of some decentralized systems compared to, say, a centralized exchange, which has a clear entity, often insurance, to handle hacks. Recovery in DeFi can be much trickier and raises these fundamental questions about control. They did note the SUI ecosystem is working on the fallout, and the SUI token had recovered a bit to $3.53 by May 25th.
That really does hit on fundamental questions about control and recovery, doesn't it? Shifting slightly, but still in stablecoins. The sources brought up another discussion point, a Wall Street Journal report from last week about big banks like JP Chase exploring stablecoin vault initiatives, maybe a consortium model for banks to use stablecoins.
Right, but the sources expressed quite a bit of skepticism about that specific WSJ report. They pointed out it didn't cite any sources and questioned its legitimacy based on what the source called the WSJ's recent track record of publishing fake news on U.S. politics. So a heavy dose of salt there from the source. The report had suggested this banking move was happening alongside other initiatives involving clearinghouses and early warning services.
And the source's stance on this was very clear, very strong. They argued the crypto space should not be a massive advocate of stablecoins because the issuers definitely do not follow the ethers of open blockchain. They cited bitcoinbxp.org for more on that.
Yeah, when they talk about ethers of open blockchain, they're basically referring to those core principles, right? Decentralization, transparency, censorship resistance, immutability, the stuff underpinning Bitcoin. The source implies that the big stablecoin issuers, being centralized companies, fundamentally operate against these ideals.
The sources also speculated about a potential Genius Act from the Trump administration, believing it will somehow support the banking industry and centralize stablecoins, maybe even pushing aside algorithmically backed ones.
Which led them to propose this, well, provocative idea. They see a need for a completely algorithmically backed stablecoin, maybe using AI, viewing it as a blue ocean, potentially the next biggest innovation needed in the space, presumably because it would align better with that decentralized ethos.
This whole section, I mean, it really brings up a crucial question, doesn't it? How do we balance this push for stability and institutional comfort, like these potential bank stablecoins, with the core principles of decentralization and censorship resistance? Especially when incidents like the SUI hacks seem to put those very principles or their implementation under the microscope.
That tension is definitely a recurring theme, yeah. Okay, let's shift gears now. The sources also highlighted some really massive tech developments, specifically happening in the Middle East, Dubai, and Abu Dhabi featured prominently.
First up, the sources talked about Tajana. That's a Dubai-based firm working on Arabic language tech. They reportedly just secured $15 million in Series A funding. Lead investor was Global Ventures, with others like WAMDA, DA, These, Golden Gate, and Terra Catalyst mentioned too. And the goal of this funding is to speed up the rollout of their Arabic AI platform, Tajana.ai.
Exactly. The sources explain Tajana uses AI, its own language models, and regional leads to help businesses optimize and automate processes. What's really impressive is their scale, apparently, operating in over 30 markets, processing over 2 billion words, supporting over 50 languages, and critically understanding 22 different Arabic dialects. That positions them as a major player in Arabic-focused AI.
That dialect coverage is huge, yeah. The sources noted the funding will help them double their research and engineering team. And they're launching an AI academy, too, aimed at training business and government leaders in the region. That 20% compounded growth rate mentioned in the material really underlines the investor confidence in AI innovation in the MENA region.
Definitely growing fast. Now, moving on to what the sources called possibly the biggest news in 2025, Stargate United Arab Emirates. This was described as a groundbreaking infrastructure cluster being launched in Abu Dhabi. It involves a global tech alliance.
And the partners listed, I mean, it's a who's who: G42, OpenAI, Oracle, NVIDIA, SoftBank Group, and Cisco. That's heavy hitters.
Absolutely. The sources broke down their roles, too. OpenAI and Oracle will operate it. Cisco's doing security. NVIDIA is supplying their cutting-edge Grace Blackwell GB200 system, serious high-performance computing power there. And G42 is actually building the facility, planned for a massive 4-gigawatt capacity.
Wow. To put that in perspective, the sources said it'll operate from this new 5GW United Arab U.S. campus in Abu Dhabi, a campus spanning 10 square miles, described as the largest outside the U.S. And the first piece, a 200-megawatt computer cluster, is apparently set to go live in 2026.
The project aims are pretty ambitious, as you expect. The sources described it as offering nation-scale compute and low-latency inferencing, enabling trusted, scalable artificial intelligence infrastructure, and fostering responsible innovation. The idea is to support major breakthroughs in areas like healthcare, transportation, and more.
The whole campus context is fascinating, too. That huge 5GW data center capacity, reportedly powered by a mix of nuclear, solar, and natural gas. The sources also mention a focus on innovation, talent, sustainability, maybe linked to something called a Sasakawa initiative.
And importantly, the sources framed this whole thing as being aligned with the US-UAE acceleration program, emphasizing safe, secure AI collaboration. Apparently, the UAE will also invest in AI infrastructure in the US, like Stargate US. This aligns with what the sources called American force investment policies, basically deepening the bilateral ties through strategic investments. Leaders involved reportedly stress themes like digital sovereignty, global benefit, responsible progress, calling Stargate UAE a historical milestone.
It's interesting, too, as the sources noted, that President Trump visited the Middle East earlier, made partnerships, and G42 and OpenAI were already active with the UAE. So these massive projects seem to be building on that existing relationship, highlighting how strong those US-UAE tech ties are becoming.
What's really fascinating here, though, is thinking about, well, you have these huge government-aligned global AI projects being built on a national scale, involving the biggest tech players. How does that massive centralized push intersect with, or maybe diverge from, the decentralized open source ethos that drives a lot of the crypto and Web3 developments we talked about earlier?
That's quite a journey we took, based on the source material you shared. We started with the immediate market impact of those tariff talks, the contrasting views on their effects. Then we looked at that snapshot of the crypto market ETF flows, the DX activity debate, stablecoin theories. From there, we got into the critical stuff like the SUI hack, raising those centralization questions, and the whole stablecoin debate itself. And finally, wrapping up with the sheer scale of AI investment and these global tech alliances forming in the Middle East, like Stargate UAE.
It really does underscore the value of digging into these specifics, doesn't it? The details provided in sources like these, it's not just about the headline numbers. It's about trying to grasp the different forces and interconnected trends shaping these fast-moving worlds. Policy, markets, tech, security, all mixed together.
And it definitely leaves us with that final thought-provoking question you raised. As we move forward, how will this drive towards massive, centralized AI infrastructure on a national, even international scale, interact with the ongoing development and adoption of decentralized technologies? Is it mostly competition? Or could we see unexpected areas of collaboration or maybe friction between these two powerful tech movements? It's definitely something to chew on as you process all this.
Indeed it is.
Well, that's all for this deep dive. Thanks for joining us as we unpack these sources. We hope it gave you a clearer picture and maybe some valuable new insights to think about.